Well,
did the same thing last week and it's done it again. It just doesn't want me to show the good source. Hopefully it hasn't just destroyed my whole recording.
no, I think it stayed recording.
Oh, bloody hell. I don't know why it does that.
Saying the hedge funds are onto you.
Bro, they must be. I'm giving out too much information and I haven't even got started yet. That's the worst bit. Okay, cool. Let's carry on where we was at. Where was we at? Okay. Come on. Maybe it doesn't like when I do these nice presentations for you. Maybe I should just not do these nice presentations. I can do the whole thing without the presentations, but it's just not the same. I quite like them.
Yeah, gotta keep
Do you guys appreciate the
presentations?
Okay, cool.
Yeah.
Okay, I'll keep them. I'll keep
Thank
them.
you, Michael. Yes, Mike. Cheers.
Okay, cool. Let's keep this loaded up. Okay, it's struggling to load it up again like last time. Let's give it a bit of time. Come on. Come on, Zoom. You can do it. Come on. Push. Okay, what if I stop my video? That might help it. Wait, okay, I think that's helped it. Okay, let's go back. Showing you all the slides in advance now. Oh, but it's basically showing my whole presentation now. Okay, let's go back again. Okay, yeah, cool. So we're talking about mindset in terms of holding. So like I said, what I want you to do is I want you to just look around your room. And I just want you to look at all the things that you've bought. And I want you to really ask yourself, what's probably the grand total of everything in just one room that you're sitting in? What's probably the grand total of all the clothes, the trainers, even the pens that you've bought, even the, I don't know, the deodorant that you've bought, just everything. I want you to just total up the grand total of everything in the room that you're in right now. You're probably not bothered about the fact that that's gone down in value. Pretty much everything you bought, most of us, it isn't going to hold its value the day we buy it. But when our assets and our investments go down by 5%, 10%, in comparison to our consumeristic items that we buy that go down 50 to 80% straight away, we get worried. We start panicking. And it's like, guys, no. We can't think like that as investors. We have to understand that at least if you're beating the bank, that's fine. If you are in a position where you haven't lost more than 20%, that's still fine. You can bounce back. You need to just look at the long-term view of things. So I've got a quote here from a book that I've just finished reading, The Book of 5 Rings. I cannot recommend it enough. You can get it for free on YouTube as well. And it says, perception is strong and sight is weak. In strategy, it is important to see distant things as if they were close and to take a distant view of close things. And I think that applies to holding on to things, because when we're looking at dips, we look at them from the time frame that we're in right now. We don't look at them from the time frame of, oh, okay, let me see how this has actually performed over the last year. Let me see how this has performed over the last 2 years, 5 years. And when we do that, it gives us a completely different perception of the state and the mental state that we're in regards to potentially selling the asset that we're in. And I don't want people to make the mistake that I made last year with Bitcoin. So bull market and a bear market defined. A bear market is defined when the market is up 20% on its previous high. The bull market is when the market is down 20% from its current price. So I think quite clearly right now we're in a slight bear market because the market dipped, but everything's recovering and bouncing back today. Now, this is the most important part that you really need to get your heads around, which is the cycles. If anything, I'd say take a screenshot of this, because this will help you just kind of go through the cycles and understand where you are and what you should expect to happen on the markets in what month. So one of the calls previously before, and for quite a few people, I've been talking about quadruple witching with people. It's quite an advanced thing. But I thought I'd get this data from one of my friends called Kachi. He had it available, and I think it really summarized it perfectly. So this is showing the past data of the S&P. So that's pretty much the whole market from the past 50 years, 20 years, and 10 years, and the typical performance of the market in those months. And if we look at March and the end of and February, they're not exactly great months. And I can guess most of us probably got into investing around October or November, and this is our first ever dip. Now, if you got in last summer, then you probably experienced the dip in August and September. And so you're looking at this again and going, well, it's just a little bit like the summer. Now, if you got in October, November, you were just on a roller coaster run. If you got in January, everything was blowing up. Everything was going good. You were winning. You were getting 100% returns on every one of your cryptos. Everything was sick. Oh, I'm a baller. I'm a boss. I'm Warren Buffett. And then the market's gone down for 5 days in a row and you're bricking it. Don't worry, I'm saying this because I've been there myself, like I've shown you. It's normal. You have to understand that these cycles are normal. So we can see in March, for the past 10 years, the market has been down in March. 10 years. For the past 20 years, it's performed a little bit okay, but not that great. Now, look what happens in April, guys. If you just stick, just look, the past 10 years skyrockets. The past 20 years skyrockets. Since 1950, it's skyrocketed in April. But then what's going to happen in May? And when is it going to get troublesome? In June. But then guess what happens in July? We're back to the races again. And then guess what happens in August and September? People get scared again. Everybody dips out. And again, if you learn about the quadruple witching, which I cannot stress for you to learn about, you'll start seeing these patterns yourself, and you'll know not just the months, but more or less the exact days that you can expect the market to kind of pull back by. So the average bear run, which is when the market is going down, lasts for around 12 months in comparison to 58 months of the average bull run. Now, is this bull run since COVID going to last for 58 months? I hope it does. That would be absolutely fantastic. That would be brilliant, because then we'll all be very, 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 very rich if we hold, especially in the crypto space. Now, in terms of historical performance, let's just look at the dip downs of these bear markets in comparison to the bulls. So if you don't want to read the numbers, just look at the red. All the way back to 1957. 1957, guys. This has been happening. Up and down, up and down, up and down, up and down. But imagine, let's say, for example, here, in around 1980s, just before the 1990s, imagine you got scared and you pulled out here. You was new to investing and you pulled out just because it dipped for a couple of months, well, not even a couple of months, days in some cases, and you missed out on a 582% growth in a 10 to 15 year window. This is the true difference between being wealthy and being rich. If you're in this game to be rich, then you probably want to leave my call, because that's not what we're about here. We're here about being wealthy and providing wealth, not just for ourselves, but for our friends, our families, and our future families as well. We're here to create legacies. Now, unfortunately, legacies aren't made in the microwave. You can go to Asda and try and see if you can get legacy in a box and just pop it in your microwave. But as far as I'm aware, nothing that great tastes that nice from the microwave in comparison to when you cook it properly. So this is just looking at the average returns since 1957 all the way up to now. We can see bear market's done about 3%, and I think it's about 20%, and the average return on the bull markets is 153%. So just hold on. Okay, cool. So what I'm going to quickly do there is we're going to just quickly have a look at the markets and just have a look at what I'm talking about here. So we'll have a look at markets and just give you a bit of context to what we're talking about. So if we're looking at US tech on the daily, look at it. Oh no, I'm losing all my money. But then when we do this and we look at it on the time frame that I like to look at it on, it's a completely different story when we look at it on the weekly. When we look at it on the weekly, it looks like it was actually meant to do that because it's slap bang on the trend line. Now, if you think this is by chance, let's just have a look at what happened on the FANG. On the 4 hours, ooh, look at that. It's all going downhill. But then when we look at it on the weekly, completely different story. Now, if you've got your technical analysis at some point and you've marked off these points, then you're going to be expecting these dips. And then guess what you're going to do? You're going to buy these dips. You're going to have the money ready and you're going to have taken profit and you're going to buy these dips and get triple the gains that you were going to get originally. The same thing on the US. And this is where it relates to that proverb. If I'm looking at the 4 hours, and I'm looking at it every day going, oh no, it's hit the resistance. It's hit twice. You can't get past it. Cool. But if I just come out to the weekly, it's not that big of a deal. That dip really wasn't that big of a dip, especially when we then compare it to the monthly. Can you even notice that dip that we've just gone through? Really? So sometimes you just got to step back and see the whole picture, the big picture, that time is actually on your side in this game. Cool. So I hope that's helped. I'm going to use this time to just oh, we got Edwin joining us, to just ask for donations or contributions towards me doing this presentation for y'all today. This is ideally, I would like donations towards this water well that I'm trying to build in Ghana. So we're on 430 so far. I'm thinking of potentially taking all donations and putting them into crypto and creating a charity account that all donations go into, and then we build up and see what investing as a group can do from people's donations, and then flipping it into stocks and then cashing out those stocks to buy the well. So yeah, let me know what you think on that idea. Just either message me personally what you think on that idea of doing it that way. And Dorian, your one-on-one coaching sessions locked in there, as you can see. So yeah, any contributions would be much appreciated to help us get this well built. Okay, cool. So now we're back to the slides. Okay, so Elliot Wave Theory. Again, if you want to find out more about this, book in a session with me, and I'll go over this in a lot more detail. Now, Elliot Wave Theory was actually created by a guy. Guess what he was called? Elliot. What are the chances? Now, Elliot came up with this theory, and it's based on human psychology, pretty much. He noticed that basically human psychology follows the same patterns throughout history. Now, if you're an avid reader of history, I've got some incredible books for you that will completely change your mind about investing. First one, History of the World by Andrew Marr. That's my all-time, probably one of my favorite books of all time. Just kind of maps out all of history and shows you the kind of cycles that we go through. Then Sapiens, if you've not read that, and then Homo Deus, if you want to kind of get an outlook on where we're going in the future. Then another one to read, if you know me, you know I'm a massive fan of Ray Dalio. Ray Dalio's current book, I've just finished reading it. I'm going to be doing a review on that. Ray Dalio's book, Navigating Big Debt Crises, I think it's called. No, it's not Navigating Big Debt Crises. It's The Changing World Order. Ray Dalio, The Changing World Order. What an incredible book. Just completely shows you how the monetary system just literally repeats itself over and over and over and over again. Everything that we're seeing now with innovation and so on and so forth has already happened in the past. It happened, and it's same with the reserve currency. Everything that's happening right now with America happened with the UK when the Americans took over. Everything that happened with the UK had already happened with the Dutch before the Dutch took over. Everything that happened with the Dutch had already happened with the Ottoman Empire. So we can just see it just consistently just repeats itself, repeats itself, repeats itself, repeats itself. So incredible reading. So Elliot Wave Theory, let's get into this. This is going to be a bit complicated. So basically we have fractal patterns. What's a fractal pattern? So trends in financial prices result from investors' predominant psychology. Now the dominant psychology is basically that, unfortunately, whether we like it or not, we think as a group. We have like an automated, ingrained group think. And again, if you do some reading on any of Malcolm Gladwell's books, it actually gets quite scary what happens with groupthink. Perfect example is with the Nazis. People literally kill other people because other people around them are doing it. And then you ask them, why did they do it? And they can't explain. It's just because everyone else is doing it and it looked good. And you're like, are you sure? And they're like, yeah. And then when they remove themselves from the group, they realize what they were doing was wrong and the emotions come flooding to them. But groupthink is an incredible thing and it can be very easily manipulated. This is the problem. And it's getting easier to manipulate, as we've seen with 2020 and social media and bots, because people think that they're talking to humans and they think that the groupthink is humans, but actually it's not, it's bots. In fact, I dare you to go and do some research into how many bots Facebook removed from Facebook last year. I think you will be terrified. I'm not a bot, by the way. I've passed the Turing test. If you get that, you get that, if you're a Blade Runner fan. But yeah, impulsive and creative waves. So swings in mass psychology always showed up in the same recurring fractal patterns or waves. So what happens is we have our impulsive wave. So our impulsive wave is the movement up, and this is the masses following the move. Then we have our free wave correction. So this is your corrective wave where the price comes down a little bit more, but this normally happens in a free wave move. So this is what I'm wary that might happen with the market right now. We've had this little dip. It's come up a little bit, but it then might just slide down again. Another terminology that you want to look for is a bear trap. You want to say that again, a bear trap or a bull trap. You want to do some research on that or book in a session with me, and we can go over what a bear trap and a bull trap is and go over more detail about Elliot Wave. So anyway, we have our impulsive move, then we have our corrective move, then we have an even bigger impulsive move, and then we have another corrective move. And then on the next impulsive move, we have our major correction where the market comes tumbling down to around here. But I'm going to mark that off for you in a little bit more detail. So impulsive and corrective waves. An impulsive wave is a large price move that goes along with the trend. Now, corrective waves are the smaller waves that occur against the trend. So impulsive move with the trend, because we see the trend is up. Corrective move against the trend because it's down. Okay, cool. So next is we have the different points. So each Elliott wave is made up of 1 to 5 movements, and then the next set is the ABC movement, is the movement down. So you have this simple kind of way to look at it. Movement 1 is the first impulse up. Number 2 is the correction. Number 3 is the third impulse, and we can see that this is bigger than the first one. And then we have impulse correction 4, which will be short. And then we have impulse 5, which will be long. And then after this 5th impulse, this is where the market will dip. Again, you want to probably back test this and look at it. So when the opposite wave is the same as the previous, the trend has now changed. So when the opposite wave, this is now bigger than the previous, the trend has now changed. So yeah, we've got this 5-wave pattern, 3 up, 2 down. That's what you're looking for. If you're looking for the Elliott wave, is a 3 up, 2 down movement. Now, when it's doing its turnaround, this is what it will look like. You'll have this ABC movement. So it'll come down to A, which will be about the same point that correction 4 was at. So you normally can draw a little support along there. And this is where people often get faked out and think, oh yeah, there's a support here. But what will happen is the bear trap will appear, where people think the market's correcting itself and it's coming up, and it will test and it will get close to the resistance point, the previous high, but then it will actually turn around and come plummeting down. Now, point C normally retraces this C movement normally retraces up to the first correction. So what you want to do is you want to mark off after, if you can learn how to map Elliott waves, you want to mark off the point of the first correction as your stop order point. If it goes past this, that's when you want to contemplate getting out of the market. But otherwise, what you want to do is you want to be also buying at this point, because then guess what's going to happen is it starts this movement all over again. So this happens on the big scale and also the small scale. So in terms of some simple rules for you to follow here, I'll give you some of these quickly, but again, if you're booking the session, we can go over it in more detail. Wave 2 normally is 60% of wave 1. Wave 3 is normally the biggest wave. Wave 4 is normally 30 to 40% of wave 3. Simple rules. Wave 3 can't be short, and it has to be the longest. Wave 3 has to be higher than wave 1 for it to count as an Elliott wave. Wave 2 can't go beyond the start of wave 1 in its retracement, in its pullback. And then wave 4 can never overlap wave 1 and can't go below the high of wave 1. Okay, cool. So facts versus fictions. Boom. This is my favorite bit, is literally looking at the facts. So what we're going to do is we're going to quickly look at the earnings for a company. So we're going to look, because we're a bit tight on time, we might only be able to squeeze in one of them. So between Airbnb and Square, there's not even a voting system on here. I'm going to throw it out to the audience and see what we kind of get back. Airbnb or Square? What are we thinking, people?
Airbnb.
Yeah, Airbnb.
Airbnb? Okay,
Yeah,
cool.
I was going to say Airbnb.
Okay, Airbnb is.
Square.
So we've got way more votes for Airbnb. So let's have a look at Airbnb's earnings. So again, to find a company's earnings, it's actually a lot more simple than you even realize. You literally go on Google and type in investors relations. Investors relations. So you can see I've already been doing it there for Tesla. That's my favorite one of all time. But I think Square might have been it, and I didn't want to get too gassed on this call. So I'm quite happy that we said Airbnb. So I'm not currently invested in Airbnb based on the earnings report pre-IPO. So this might actually sway my investment decision to actually get into Airbnb. So let's have a look. So investors relations, Airbnb. This is where we will find the juice. Q4, 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 Q4. Here we go. Bum, 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 bum. So the overall results is telling us here. So this is kind of like the guidance for their results, but we want to actually have a look at the actual report. So that would have been if we wanted a quick glance, but we want to kind of go into the actual report so we can give you a bit of an idea of the kind of things that we're looking out for in a report. Show events and presentations. Oh. Oh, okay. Yeah, perfect. Okay, cool. Let's do this. So really nice presentation in comparison to some of the ones that I've seen. So Nights and Experiences booked net of cancellations and alterations. Despite the pandemic in 2020, Airbnb's business proved highly resilient with strength in North America, domestic travel, nearby travel, and long-term stays. Wow, really? They were up. Really? Q4, 46.3 million, 39% year-on-year growth. I don't know how the hell they did that. Okay. Right. Gross bookings, net of cancellations and alterations. Airbnb attracted nearly 24 billion of bookings in 2020 based on the inherent adaptability of the platform, support a wide range of use cases. So full year 2020, 23.9. They managed to pull in 5.9 billion year on year for just Q4. Year on year growth 37%. Wow, this is actually a gem, you know. Revenue 3.4 billion, 30% growth year on year. Wait, if you've had 30% growth year on year in 2020, that's huge. Net income divided by loss. Q4 2020 net loss was impacted by charges related to our IPO. There we go, that's what I said, including 2.8 of stock-based compensation expense. So this is what I thought would destroy the company. This is why I didn't invest, but it seems like they've managed to do okay. So adjusted EBITDA, so this is earnings before interest, tax, depreciation, and amortization. This is if you're comparing it to something like booking.com, just because of the different tax regulations. So this is where we're going to do a quick skim read. Always want to read the shareholder letter. So this kind of gives you their perspective on what happened. So 2020 was a year when nearly everything changed: the way we live, the way we work, the way we travel. Airbnb changed as well. La 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 la. Through crisis, we also sharpened our focus. So I'm just going to speed read it. Corporates became stronger, big companies, so this is public of law. But we did not go out there on our own. We thank our employees who worked tirelessly in our community. Q4 2020 revenue was down 22% year over year, demonstrating Airbnb's. Oh, were they minuses? No, they weren't. Okay. Okay, so at the depth of the pandemic, we forecasted our 2020 revenue would be less than half of what it was in 2019. Yet in the end, the total revenue of 3.4 billion for 2020 decreased only 30% compared with 4.8 billion in 2019. In Q4 2020, revenue of 859 million declined only 22% compared with 1.1 billion in Q4 2019, despite the second wave of COVID-19 cases, lockdowns the world experienced in Q4. Q4 2020 net income was impacted by charges related to our IPO. Charges associated with our IPO and a subsequent stock price increase contribute to our net loss in Q4 2020 and fiscal year 2020. Upon our IPO in December 2020, we recognized a non-cash stock-based compensation expense of 2.8 billion that they had to pay out to early investors. This is much larger than a typical quarter because at the completion of the IPO, similar to many other companies, we were required to recognize a significant portion of all stock-based compensation provided to Airbnb employees over the last several years. The increase in our stock price also increased the value of warrants issued in connection to a long-term loan agreement entered into April 2020. We recorded a non-cash mark-to-market adjustment of 827 million related to warrants in Q4. A net loss of 3.9 billion in Q4 2020. Okay, cool. So basically, they've got over what I thought was going to kill them. Due to our strong financial discipline in 2020, all operating expense line items, excluding stock-based compensation and stock settlement, were down from a year ago. Okay. Looking to 2021, we are preparing for travel rebound as vaccine is rolled out and restrictions lift. Before we provide more details on operating and financial performance, we'd like to make sure that those of you less familiar with Airbnb have a chance to learn more. Our S1 included a letter from our founders that describe what makes Airbnb. Please find a copy in the letter. What makes Airbnb? Connection with belonging, a little bit about the founders, how they started, why they're creatively led, their views, resiliency and focus. Resilient model. When borders closed and travel stopped, our business declined by nearly 80% on gross bookings. Okay, more focused and efficient company. We miss traveling too. Airbnb, preparing for recovery. People miss traveling. Yeah, we know that. Okay, let's get into the numbers. Okay, after their own health and the safety of others, the top reasons for getting vaccinated are the ability to connect with friends and family, 37%, followed by the ability to feel safe to travel, 32%. People will continue to travel nearby. A majority, 50%, prefer a domestic or local destination versus 21%. So it looks like people were just getting Airbnbs in their ends, which, okay, fair enough. Educate the, so specifically our 2021 plan, this is what we're going to read. In 2021, we will maintain the focus and discipline that helped us manage through the crisis last year. Our priority is to prepare for the coming travel rebound. To do this, we will perfect our existing product by improving the end-to-end experience of our core service of both hosts and guests. Specifically, we plan to educate the world about what makes Airbnb different, hosting through our marketing and communications. I think this is a big thing because of the economy gig. There's going to be a lot of people that are going to contemplate Airbnb now that they've lost their jobs that wouldn't have contemplated it before. Recruit more hosts and set them up for success, especially if they're aggressive. That's a good sign. Simplify the guest journey to make it easier for guests to find the perfect stay. We are simplifying every part of the guest journey as well as improving our search functionality to support more flexible travel plans. Interesting. Deliver world-class service. Finally, wherever our hosts or guests need us, we need to deliver world-class service. I think that's a slight little hint that they're going to go into long-term stays and long-term rentals. And if they start edging in on that market, that is very disruptive. Made possible by helps. Recently, we launched our first large-scale marketing campaign in 5 years. What? That's their first marketing campaign? I need to check that. There is no way that that's their first marketing campaign. That's ridiculous if this has all been word of mouth. This campaign will help our guests to understand our core value proposition of hosting and how to benefit. Oh shit, I've never actually seen an Airbnb ad. Has anyone seen an Airbnb ad before this year?
No, not this year.
Yeah.
Before this year, had you ever seen one?
I'm pretty sure I used it before. I don't know.
I've
Actually.
used. Yeah, no, there is an app. I've used it.
No, not an app, an advert, because they're saying that
Oh,
they've never
yeah.
done marketing before. They've
No, I've never seen an Airbnb advert. It's word of mouth only.
Oh,
Google Ads
shit.
probably they'd use, but not terrestrial TV.
Yeah.
Wow, that's crazy. Wow, that's blown my mind. Damn, that's killer, that. Okay. As noted above, Airbnb has 5 stakeholders: host, guests, and the communities in which we operate, employees and shareholders. In Q4, we entered 2021, took many steps and initiatives to support our stakeholders. Here are some of the highlights. Serving our host endowments. The goal of the host endowment is to benefit our host community through a variety of potential programs, initiatives, and grants. We seeded the endowment with 9.2 million shares from Airbnb and Brian Chesky, putting plans in place to make an additional personal contribution to Airbnb shares worth over 100 million. Hosts will provide input on how funds from the endowment are allocated to benefit the broader host community. Okay, I need to look into that. What? We also announced the creation of the Airbnb Host Advisory Board in October. The Host Advisory Board will help present ideas and provide input on Airbnb practices. Okay, so basically they're going to literally talk to their hosts all the time. Host Spotlight. Okay, giving us a bit of the emotional story. Service our guests. 40% of people searching on Airbnb have been flexible in terms of their date or location. So we launched a flexible dates feature that allows guests to search for homes in a whole new way. Instead of having to select exact dates for their trips, guests are able to search for a weekend getaway, a week-long vacation, or even a month-long stay sometimes in the next few months. This allows them to browse more options when being flexible in the exact dates of the trips. Okay, so there's change in the UI. Serving our communities, Airbnb.org. Communities near around have grappled the devastating impacts of natural disasters in recent years, and more recently COVID-19 pandemic to support those temporarily displaced. Oh shit, that is a mad play. Oh, mad. Okay, that's a very interesting position to put yourself in. That opens them up to all kinds of government funding. So they're using their system to provide emergency accommodations in troublesome times around the world. If they can come out with like portable homes on top of that, like RVs or caravans, that alone in crises is mad powerful. Yeah, that's crazy. Federal officials asking people not to travel to Washington D.C. in the lead up to the inauguration week in January. We announced that we would cancel reservations for the area. Guests who reserved reservations council were refunded in full, and hosts would pay the money they would have earned. Wow. They also identified numerous individuals who were associated with the known hate groups and banned them from Airbnb's platform. Oh, okay. Serving our employees, diversity and inclusion. That's always good to see. By the end of 2025, 20% of our employees will be underrepresented minorities. By the end of 2025, at every level, 50% of our global employees will identify in the gender binary will be women. Some of our shareholders, IPO, we commented on our IPO in December 2023. IPO, we welcome many new institutional individual investors. Okay, cool. Numbers, okay. Q4 gross booking value. Okay, we already looked at that. Q4 2020. Q4 2020, Airbnb delivered 46.3 million nights and experiences booked net cancellations and alterations, representing a year-over-year change of 39% for the same period. Gross booking value net of cancellations and alterations was 5.9 billion, representing a year-over-year change of 31% with the same percentage change ex FX. Exiting Q3 2020, the travel industry continued to be impacted. On a regional basis, America is the most stable region during the pandemic. It's continued in Q4. Our business was most affected in the emerging markets area, especially in countries that had lockdowns and cross-border. Historically relied more heavily on cross-border travel, examples such as Great Britain, Italy, and Germany. We did see some slight acceleration in Q4. Okay, that explains that. Such as Brazil and Mexico, recovery in Asia Pacific continues to take time. Yeah, that's where I thought they would have been hit really hard, but if they're not making a lot of money there, then they can afford to take that L. For domestic travel in Q4 exceeded the same period in 2019 when people travel less than 50 miles to their destination, growth in nights booking. When people traveling 50 to 300 miles, it was relatively strong. Consistent prior quarters, demand in Q4 supported people seeking to travel less. That's the popular areas. Q4 guest stayed in Sicily than in Florence and Venice combined. And more in Devon than in Oxford and Cambridge combined. Yo, people are weird. Okay, if that's what people are doing. Just in changing travel patterns, our business continues to be highly diversified. No city representing more than 1.1% of our revenue. Wow. Okay, so let me try and break that down, what that means to me. That means that they haven't got a major city that they're dependent on. They are completely like not centralized. Not one city contributed to more than 1.1% of their revenue. That's amazing. So that means like literally a whole major city, a whole major tourist city like Barcelona can ban Airbnb and it wouldn't even scratch them. That's very interesting. Okay, cool. As people continue to live and travel more flexibly, entering 2020 during the pandemic, we've seen steady growth in our long-term stays. This is what I wanted to see. This sentence right here is the gem. If this trend continues, they make more money. It's just, okay. With regard to booking windows, people tended to book closer to desired travel dates, given the uncertainty of future travel restrictions. Obviously, we saw the most resilient big lead times of under 30 days. Average daily rates when we track as growth booking value per night, experience booking net cancellation, increase of 30% year-over-year, 0.8 ADRs. A bit higher than other parts of the world. This was supported by more guests booking entire homes relative to private or shared homes where prices are higher. The growth of our nights booked. Okay, people are getting very strange. That actually makes sense though, because the more big money companies that allow people to work from home, the more likely people with big money are going to spend big money on long-term bookings in Airbnbs and have a villa to yourself. If you are able to work completely from home and you have no responsibilities in terms of like kids, so on and so forth, or even if you do have kids, would you book out an Airbnb in say New Zealand or Thailand or Devon for a month? You probably would, because you're not obligated to go into an office. So that makes sense. And all the biggest tech companies have gone this way already. It's just now a mainstream adoption for the smaller companies. So this, I think Airbnb is actually onto something way bigger than we even realized with this long-term stay thing. I think basically being able to get an Airbnb for like 6 months, people will do that. I think the whole idea of, I think Airbnb is going to make a pivot from stays to almost like a rental system. And I think it's going to work very well for them because they've got the trust. And again, for property owners, why would you not do that? So in Q4 2020, revenue was 859 million, representing a year-over-year change of 22%, the same percentage change. Okay, cool. So we've kind of read this bit already. Okay, here's the spreadsheets. So Q4 2020 revenue was down only 22% year-over-year. That's actually crazy. It didn't get hit that much. So the darker pink is 2019, and then the lighter pink is last year. So we can see the biggest hit was Q2, but it didn't destroy them. Net income from 2019 to 2020. So again, we saw that they weren't profitable. This is another reason why I avoided investing in them at the start, because I only tend to invest in companies that are profitable. So Airbnb wasn't, which is completely fine for a startup, especially for a tech company. But then in Q3, just before IPO, it actually was profitable. It always seems to be very profitable in Q3, but then it kind of got hit hard. Quarterly adjusted EBITDA, Q3. Operating expenses in Q4 2020 impacted 2.8 billion. So we talked about that already. Cost of revenue for Q4 2020 declined by 29%. Okay, if you understand business, you'll know that that frees up a lot of cash dollar. That is very interesting. Due to lower payment processing fees associated with lower booking volumes as well as lower infrastructure expenditure. I'm interested to find out how much of that was to do with lower booking volumes or if they've got a better deal with their payment processor. Operations and support costs for Q4 2020 increased by 54%. Okay, those lower bookings. Product development expenses for Q4 2020 increased by 44% year-over-year, 630, excluding impact of stock-based compensation. I'm gonna just here we go. Guidance outlook. In the near term, we anticipate year-over-year comparisons for nights and experiences booked of cancellation results for post bookings, state growth for business issues, increase in cancellations. Revenue year-over-year in Q1 2021 expect to be less than that Q4. For the remainder of the year, it's too early to predict overall recovery trends for the travel industry and impact of our business. We're encouraged by our continued resilience. Okay, so they're basically saying they can't actually predict what's going to happen next year, which is fair enough. With regard to expenses, we'll be focused on making continued progress in expanding our adjusted EBITDA margin as we scale. Specifically in 2021, we plan to continue to improve our variable costs due to typical seasonal patterns. We expect that sales and marketing expenses as a percentage of revenue in the first half of 2021 will be higher than the second half. Marketing campaign that we're running the first half of 2021 in advance of the summer travel season. Similarly, we expect that operations and support as a percentage of revenue in the first half of 2021 will be similar to what we expect. Capital expenditure 2021 will be higher than that in 2020. Okay, that was an interesting earnings report. Here's all the numbers if you want to look at it. But again, I'm going to go over that in my own free time. This is now where I'm going to hand over the show to a man like Ninja. Ninja, are you there?
Yeah, I've been here. You know.
Okay. Let's go. So do you want me to make you host so you can talk? I put Kyber there, but I don't know if that was the altcoin that you wanted to talk about. Let me just get rid of that.
No, not really. But I got a host of Kyber Network, but I don't want to talk too much about it because I'm not that knowledgeable.
So we're going to talk about. Let me just make you host. Over to you, Ninja.
Okay. So, hey guys, what's up? Okay, can everybody hear me?
Yep.
All right. So, who here is invested in crypto? Hopefully, most people.
Yeah.
So, I'm just gonna show a quick flip on an app called Swissborg. Anyone who doesn't have this app, Mr. Harding, if you could drop your Swissborg link in the comment section.
Yeah.
So, most people don't know what Swissborg is because it is a super low-key app. I used to be, by the way, for those that don't know, my name is Fadlan. I also go by Ninja T. That's kind of like my online persona alias, which is why Mr. Harding called me Ninja. I teach beginners and intermediate cryptocurrency education, and I also do like back-to-back packages with Mr. Harding if you want kind of like a 2-1 crypto and stocks. So I will be talking about Swissborg, which is my personal favorite beginner cryptocurrency app. I've been on it since kind of late January. I used to be super pro Coinbase. It's very user friendly. What I want to do is on Swissborg, I'm going to show you guys how to kind of either daily or every 2 to 4 days when the market's in your favor, as in when it's on an uptrend, how to basically ride your Swissborg and turn Swissborg into Flipborg. So let's go. Again, Mr. Harding will drop his Swissborg link in the comment section below. Please do use it, as yourself and Mr. Harding will get some free Bitcoin, which is lovely.
Woo!
Yeah. So can you guys see my screen?
Yep.
Amazing. Okay, so this is how simple it is. For any of you guys who don't have the Swissborg link, again, please do sign up under Mr. Harding's link because it's in both your favors. If you don't use Mr. Harding's link, you won't get a free Bitcoin. And who doesn't want free Bitcoin? So when you do create the account, the first thing I want you to do is, well, do what you want really, but obviously this is some good advice here. Once you create the account, again, creating an account on Swissborg is very quick. It takes about 12 minutes and you're approved immediately. This is compared to, say, apps like Binance or Coinbase that may take a day or two. In my experience, and through lots of my students' experiences, Swissborg is immediate. Then click on British Pound and then click deposit. So as you see, funds must come from your own account. So don't send it from anybody else's, or there will be a fee of potentially 25 euros, which you don't want to pay. As you can see, there's a beneficiary, account number, reference number. Get all of this right, exactly right. Where it says Swissborg Solutions, capital S, capital B, all one word, Swissborg Solutions, space OU, get that exactly right. Deposit £1. Only deposit £1 because we want to make sure it works. Once £1 works, proceed to deposit as much as you want, but if you deposit a minimum of £49, yourself and Mr. Harding will get some free Bitcoin. Yeah, which is very, very nice. You will get anything between €2 and €100, but I have known people to get a good amount, like €40, etc. And then you'll have your own link and you can share it with other people. So unfortunately, oh, actually, some of the markets are up, so I might do a live flip right now. So, the number one reason why I like Swissborg, well, there's several reasons. So I'm not going to say number one, but first of all, just UX wise, it's very, very sleek and easy to use. They don't give you an overwhelming amount of opportunity, an overwhelming amount of coins to pick from. but the coins that they have provided with, I think are really great. So it's kind of like a minimalistic quality over quantity coin selection. However, let's talk about the number one coin on Swissborg, which is the Swissborg coin. Woo! So as you can see, this coin has done an absolute mazza. As soon as it will, please don't crash me whilst I'm live. Please load. We want to see. Oh no, no, no! Come on.
I'll turn off my
All
video.
right. Okay. Amazing. As you can see, this coin has done.
Oh no.
No.
Oh, you got sniped, Ninja.
Sorry, guys. I'm back.
You got sniped by the Matrix. The agents are after you, bro.
They don't want us to tell them. So as you can see, this coin has performed amazing in the past year. It's gone from 22, sorry, my bad, 0.0224 cents. So basically, you know, kind of like 1.5p to now 90 cents. So it's done about 37x in
Jeez.
1 year, 37x, so 37 times. So if you invested £100 in Swissborg coin this time last year, the value of your Swissborg coin will be £3,700, which is phenomenal. Even looking at the last month progress, man, don't freeze on me again. How embarrassing. Please don't embarrass me like this, Swissborg. Please, my internet.
Come on. Swissborg. Nah, it's not trying to have it, bro.
I'm so sorry, guys. We're trying again.
Because of Zoom, Swissborg must be camera shy.
Don't look at me.
We are trying again. Hello.
Alternatively, should I try it from my phone?
Oh my God, this is so embarrassing.
I can try it from mine if you want.
Mr. Harding, you might have to talk.
Yeah. All right, cool. Hold up. Let me join and then.
Yeah. Log in your app first, and then share your screen. Obviously, you don't want to type in that code.
I'm fingerprints.
Sorry, guys. Oh, okay, of course.
Unless you can copy my fingerprints over Zoom, that's pretty impressive.
All right.
By the way, my wife does those custom animations if you're into your anime.
Yeah, anyone who needs a Swissborg link, please do holler Mr. Harding. Okay, amazing.
Wait, who does what kind of things?
This, my girlfriend does those.
Oh my gosh.
We out here.
All right, okay, so let's just go on Swissborg coin.
Yeah.
No, inside the marketplace, not in your portfolio. Swissborg. Yeah, let's just take a look at the 1 month. Obviously, this is one of the cryptos that is actually still doing really that has been doing well even in the bear market, simply because it's super low key. So again, I'm going to talk about Swissborg for a quick minute for those that don't know about it, and then I'm going to teach you how to flip on Swissborg on a daily basis when the markets are correcting. So just click on learn about Swissborg, and then click view analysis. Okay, then scroll down. So scroll down again. Obviously, we've got the charts there, and then you can also click on Trading View. Don't do it, but do you guys see where that blue icon is? Click on that quickly, Mr. Harding, and then we'll click off. It'll just bring you to a really great website called Trading View, where you can do some further technical analysis. But we will leave that out for now, because we don't have time for that. We don't have time for that. And then click on scroll down. Okay, let's do some basic analysis. Scroll down, all the way down. Okay, as you can see, it is rank number 72, and it's ranked by, just click on 72. It's ranked by CoinMarketCap. Anyone that doesn't know, CoinMarketCap is a very good, reliable source for cryptocurrency, coinmarketcap.com. It is the #1 resource for beginner cryptocurrency users to use for data. As you can see, it's the 72nd most popular crypto in the world, ranked by CoinMarketCap, which is a very good place to find data. And yeah, no one really knows about it. The market cap is 833 million, which is extremely low. And this app only has 100,000 downloads compared to Coinbase's 10 million. So it makes sense that an app with such low, it makes sense that with the cryptocurrency trend going up, becoming way more popular, apps becoming more and more popular, people will turn to apps like Swissborg when they find out that Coinbase are charging 8 to 9% fees, and Swissborg only charge about 1%. So if you buy £100 worth of Bitcoin on Swissborg, it will only cost you about £1 in fees.
Sorry, can I just add one more thing?
Yeah.
And also, to do trades on Binance, you have to be able to fly a rocket ship, because that thing is a myth. Just thought I'd leave it. Just in case you're new and you're trying to use Binance, and if you're new to trading and you think Binance is crazy complicated, don't worry. I've been in this game a hot minute, and I've spoken to countless traders, and they're like, yo, Binance is a bit, yo.
You know what? Some people love using Binance, including Ollie. By the way, you got 6%, so let's make sure this charge lasts for this tutorial. But anyway, I just want to quickly show you guys two very cool things that Swissborg have, and they have what's called a scroll up, a Cyborg predictor and a Swissborg indicator. So click on Cyborg predictor, please, and click on Swissborg indicator.
Got a plug.
Oh, don't crash. Okay. Please stay here. Please stay here.
I clicked it. What else do I press?
Oh no. Are you there?
Yeah, we're there. We're here.
Yo, Mr. Harding.
Yo.
Please be here. Please be here. Can't hear him.
Yo, I'm here.
Can't hear him.
I'm here. Keep talking.
Yo, can you hear anyone, Ninja?
Oh, this is so annoying.
It's quite funny. Just keep talking, bro. Give me messages. Bro, keep talking. Give me messages. Keep talking. We can hear you. One Ninja. Or has he completely come out of it? He's completely come out of it. Is he back?
I am back. This is so frustrating. Okay, right, amazing. So, as you guys can see, the Cyborg predictor predicts the market movement for the next 24 hours. And the Swissborg indicator is more of a medium market indicator. As you can see, they're currently right now bearish. Now, they are not 100% correct. However, if you're a beginner, this is a very, very relatively safe way to flip on a Swissborg app. It's very, very simple. We find a coin where the Cyborg predictor is bullish, so it's green and has a strong strength, and also a coin that is bullish on Swissborg indicator and has a strength of at least, I say, 3 out of 5. And an easy way to flip on Swissborg is to basically put the majority of the portfolio in the coin that is bullish. Now, obviously, we can't 100% rely on the Cyborg predictor and the Swissborg indicators, which is why learning to how to map out lines and information analysis is also important. But I think these are great tools also, and I have found them to be relatively accurate. So let's close Swissborg. Let's just see if there is actually a coin right now with a Cyborg predictor that's bullish in the next 24 hours. But I don't know if there will be in the current state. Please tell me I've not frozen.
We got Cyborg predicting bullish.
Yo, Mr. Harding.
Yo.
Hello.
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 I can't hear anybody. It's very annoying.
Hello.
Hello. Hello.
Okay, I'm gonna carry on teaching what ninjas taught me from here.
I got a WhatsApp saying, keep talking, we can hear you, but that was 3 minutes ago, and I can't.
Something with the strongest strength. So far right now, we've got the Cyborg predictor on Ethereum is 1.5. So we're looking for something to beat 1.5. So Swissborg is on, no, that's not bullish. USD coin, no info. Pax Gold, no. Engine, no. Kyber, oh, bullish. Oh, it's on a half though.
Yeah, Mr. Harding, I've just taken a look through on the app myself, and it is Ethereum is the highest strength bullish.
Okay.
For everything is bearish on the second one.
Mm-hmm.
Everything's bearish on the Swissborg indicator, but on the Cyborg, Ethereum is the highest strength and bullish.
Okay, cool, perfect. So yeah, what you can do from there is you can either select Great British Pound and trade that to Ethereum, or, which I think is amazing, I can trade it from one of my other cryptos. So let's say, for example, I'm trading it from my Binance coin. I can either flip, literally just press 50, and it will do 50% of my Binance portfolio, or I can do it in Binance, and we'll do 25% of my Binance coin into Ethereum. Just simply press next. Oh, it's below the minimum, so it's got to be, let's just do it, 50%. What? Those are not meeting the minimums. I've got to flip all my ETH, all my BNB just to prove the point. There we go. I've just flipped all my BNB into ETH just to prove a point to you guys about how simple it is. So you can see, super simple exchange, boom, press finish, done. Simples. Now, because I want to put I want to have something in my Binance coin, I'm going to show you how simple it is to buy it. So I'll put 20. It's Binance Coin. Or 1971. There we go. Boom. Look at that. 2 trades in literally a matter of seconds, guys. Cool. So that's pretty much that. Ninja's not available, so what I'm going to do is I'm just going to open this up now for a quick Q&A. We've not got Morgan this week. Morgan, I think he's still on the call, but I don't think he had a presentation and we're a bit short on time. So unfortunately, Morgan, if you're still here, you're going to have to do your presentation next week, if you did have one. So yeah, let's just quickly go to a quick Q&A. I'll take 3 questions from anybody. Fire a question at me. Someone's got to have a question. Testing.
Yeah, I think the Elliot Wave Theory is quite an interesting one. I've seen it. I've sort of briefly seen it before. I suppose does that break down into like the lower time frames as well, or are you looking over sort of years mostly?
No, it breaks down into all time frames. This is what I mean. This is where it gets mad trippy and like, what? Wait, there's a pattern within a pattern within a pattern within a pattern. So yeah, it gets a bit mad trippy once you start looking for it a bit more. So yeah, it's it's a lot more complicated than it first looks because it's very, very subjective. And you can start tripping yourself up by having a bias towards wanting to find Elliot Wave. So what you really want to do is you want to pair up with someone that's going to, whenever you're mapping an Elliot Wave, I would always suggest get a couple of people that understand how it works, or learn it with somebody and get them to map it with you and kind of go, yeah, that is there, that isn't there. Because it's, like I said, it's very, very subjective. And there is meant to be like a set of rules that you're meant to follow. That I'll go over in, we've got our technical session together next anyway, so I'll go over the rules for it in a little bit more detail, of what counts as Elliot Wave, what doesn't. But again, because of the popularity of its use, a few rules that weren't originally there have kind of snuck in, and so yeah, it's a bit of a tricky one. But yeah, great question if it applies over different time frames. Cool.
I guess a bit of a follow-up from that would be, obviously the big dogs, right? The big money, the institutions. You mentioned sort of about bots, and they're always monitoring the markets, and they can move the markets a lot better. Do you think there's potential that if you're as a retail trader, you're following these waves, you're following any sort of pattern, that they're aware that you're following these patterns? They're aware that there's statistically, you're going to buy here, you're going to buy there, sort of thing, based on patterns that are taught to, and I don't know, obviously Elliot Wave is probably quite a very in-depth sort of slightly on the radar sort of thing, but
yeah, I'd say traders, the big hedges, they know. It's a bit weird, actually. It's actually a good question now I think about it. You'll be surprised how much they don't know. Some of them, like some people that work for some of these funds that move money around, don't even know who Warren Buffett is. So you'll be surprised. Some do know, and then some are a bit like retail traders, where some will know loads of technical but no fundamental, or some will know loads of fundamental but no technical, and then some will be quants, which are just complete data freaks that run algorithms all day every day, and then they can't account for complete random human behavior. So like they can't account for, a quant can't account for Elon Musk's behavior. Like you can't, like no matter what AI simulation you run on trading Tesla, it won't work because Elon will just say what he wants when he wants, or go on Joe Rogan and smoke weed. And just mess up the algorithms calculation. So that's why I think there's only just again from reading the history books, from reading Andrew Marr's History of the World, from reading Sapiens, one thing that I always stress, and speaking to friends that work in artificial intelligence, always rely on human randomness. It's just too random. Like you can't actually ever predict all human behavior. It's completely like all you got to do to try and think out if you can predict human behavior is watch a meme compilation and figure out if you could have guessed what was going to happen, or if you had a feeling. Like you can't. We're just actually too random. We just do dumb ass random shit. And then when you combine animals with that and nature, like there is too many goddamn variables for anybody to be able to calculate anything. Like people literally die because their cat ran past them and they fell down the stairs. Is that crazy? Like a CEO of a megacorp could die because they go to turn on their light and their hands are a little bit wet and they get electrocuted. It's literally that random.
You know, you can die from like sitting down as well.
Yeah, like life is too random to calculate everything. So yeah, they know this stuff, but I just wouldn't really worry about them being onto loads of people using different trading patterns. And again, there's too many trading patterns now, and now there's too many different indicators, and there's the more things that get added, the harder it is to predict the human behavior, because we're just adding more variables consistently. And then the more people that get involved in the market, the more people that become educated, the more it gets harder to predict. And this is why I think there's a bit of the financial education isn't really taught, because it makes it harder to predict what we're going to do. The more we become educated, they can't predict. Like if you just take this back 20 years, you can predict like what was going to happen because information couldn't travel this fast. So you had that kind of edge on the retailers. You had like at least a day's edge. Whereas now, if something happens, we all find out at the same time, more or less. Maybe half an hour delay, unless they're keeping it top secret. But yeah, I think that's the situ there. I'll take another question. Anyone got another question? Come on, someone must have a question.
I had a question.
Go on, fire away.
So I guess like kind of to an extent, what would you say is the best kind of your intuition? How much would you follow that?
Elliot Wave.
That? Just in general, like investing in any kind of.
In terms of using technicals.
Yeah.
So I showed Ollie the other day in my course. Like I actually don't use technicals first. I do all the fundamentals first, then the technicals, because technical information is just fundamental information on the screen, if that makes sense. So once you kind of know the truth about a company, about its history, about its past, about how much the company's got in reserves, about so on and so forth, you can then kind of determine what's going to happen with it, which is, again, perfect example is the GameStop thing. If you knew the fundamentals on GameStop and then you do the right research and you can see what hedges were getting into it, it was easy to predict that it was gonna blow up, because too many hedge funds were getting into it, and it was like, why are they getting into this if its fundamentals are terrible?
Okay.
And then that's why I always tell people go fundamentals first, then go your technicals. And in terms of crypto, you want to look at the use case first, then look at the technicals, because if something happens, if the crypto space has a massive drop down, like we've seen with Swissborg, if it's got good use case, it'll still go up.
Okay.
because people are using it, so people are buying the coin to use it, and people are mining it, and so on and so forth. That's what I'd say on there. I'm leaving the link to my course in the chat. For anyone that wants to find out more about my course that I do. Oh, I thought it posted the whole thing, but it didn't. Oh, that's annoying. Okay, cool. If you want to know more about the course that I run, and then also the financial literacy course that I've got that's available for you, drop me a message on Instagram at I am Mr. Harding. Any of you that are still here. Then I want Lucas or Morgan or Rashay to ask me a question. One of you. No pressure. Question about anything. Morgs, you not got any questions?
I'm just trying to think of one now.
About any stocks? You don't even want to know my watch list?
Have you looked at the Zoom earnings?
I've not looked at the Zoom earnings. I'm saving that one because I'm excited.
Look at the Zoom earnings.
Are they a madness?
They're nice.
Are we expecting a bit of a bull run?
Something like that, therefore.
Okay. Well, there you go, guys. You got a little something to do there. He's just told you go look at the earnings, and now you know how to find them. Investors Relations on Google, and add Zoom and go read that report, and then straight away you have an edge over the majority of the market. So yeah, we're gonna wrap it up there. I'm just gonna quickly show my watch list for this month. And this is the Facebook group that I've got as well. If you want to be added to it, if you're part of either or one of my courses, either my free one or my paid course, you can get in this group. And it's just time well invested on Facebook. And my watch list for this month is the following: Slack, Pinterest, Twilio, Facebook, C Limited, Verisight, LendingTree, Unity, Fastly, Intercontinental Exchange, Hoya, 2U, Mercado Libre, Open Door, CloudStrike, DocuSign, Cloudflare, Jumia, and Veil Mining. So you want to check those out. So thank you very much, guys. Really appreciate you all. Thank you ever so much. Once again, any donations, much appreciated. They're available in the chat. Just simply go in the chat and find the link. It's been a blessing to have you all. Please, I really appreciate it if people can take a screenshot and share it on their social media platforms that you was in today's call, because we need to get more people educated and in the game. So yeah, really appreciate it if anyone can take a screenshot, put it on their Instagram, tag me, share it, tell a friend, because like my show's called, it's the game. If you ain't playing it, you're definitely getting played. So thank you very much, guys. Look forward to seeing you all next week at 8 p.m.
Thank you.
No worries. See you later.
Yeah.
See you later, Michael.
See you later. Bye.
Thank you.
No worries. Bye. See you later. Bye. Am I going to do it again, what I did last week? Yes, I am. Yes, I am. I'm going to give out some gold. Pays to stay behind a little bit. So I'm going to suggest that people look at two companies. Williams-Sonoma, that's one. There's another one with the ticker symbol INTU, not the shopping center, but just another one called INTU. Check out what they do. Check them out. And then one that I did in the session with somebody the other day, which was very interesting, was Revive. REVIVE, Revive Therapeutics. And then last but not least, Schrodinger game. Hopefully, when people watch this back on YouTube, they'll pick up that they should stay until the very, very end, until I've left. All right, guys, see you in a bit.